Hi, Andrew Cooper here from Advice for Living Financial Planning in Diamond Creek. I wanted to cover off a couple of issues quickly today in the video. Firstly, the impending trade war that Mr. Trump seems to have started with China and possibly the rest of the world. The Labor Party's policy, which it seems has been changed yet again, on the refund of franking credits, or should we say the stopping of refunds on franking credits from share dividends. And finally, just a quick reference to Four Corners program on Monday night of this week. Firstly, to the trade wars, Mr. Trump has foreshadowed and also implemented a number of tariffs on imports into the US, and this seems likely to bring a response from China, but also a number of other countries. It's particularly China that the whole thing is aimed at. It has had some impact on share markets. They've eased a little bit, although fortunately there's been a fall in the Australian dollar, and so this has cushioned the impact of those falls for people with international shares, particularly American shares. But so there has been some volatility on that front. The indications are that Mr. Trump may just be really positioning for some negotiations, albeit in a fairly aggressive way, but that we're not looking at the end of the world or a major trade war, but merely that they're just setting up fairly aggressively for some trade negotiations. So I would expect there'll probably be some ongoing volatility, but I don't expect that there will be a major crash on that front. But we are watching and waiting, and we're ready to act if necessary. But as I say, all the indications are that it's really going to be about the negotiations. America has a number of issues where they have concerns with China, in particular things like copyright infringements, and also there's a very unequal balance of trade. Notably, the tariffs on steel and aluminium are not really going to have a major impact on really either country. But so anyway, it's a watch and wait area on that trade war. As I said, fortunately the impact has been fairly minor. Second issue is the Labor Party's policy, which was announced a week or so ago, about stopping the refund of franking credits from share dividends to people that are on zero income. So basically, people that have got shares either in their superannuation pension accounts, or certainly people that have just bought shares outside of superannuation. And if you're retired and not really earning any income, then you can claim back the tax that was paid by the company that paid the dividend. Typically, the dividend payers pay taxes at 30% in the dollar, so 30 cents in the dollar. So if you're on a zero income, you can claim a refund for that 30 cents in the dollar. The initial claim from the ALP was that it would recover something like $59 billion, and that shock horror, also it was all about rich people, and they were receiving refunds of $2.5 million and this sort of stuff. All of that turns out to have been completely untrue and very, very misleading. Just as an example, to have gotten a refund of $2.5 million, you would have to have over $100 million of Australian shares in a superannuation fund in pension to get it. Now, clearly Mr. Shorten doesn't understand the rules, because if he did, he would know that you can only have $1.6 million in a pension fund these days. And so if you had $100 million, it would be in an accumulation fund and it would be paying tax, rather than receiving $25 million in refunds. Now, it would, of course, that such a fund, if it existed, would receive rebates, but nothing like the order they're talking about. So again, this thing was designed, the actual outcome of this thing, if it was to be put in place as they initially said, would be that it would affect people at the lower end, people that have got, that have either saved outside of the super scheme and are funding themselves through share dividends in their retirement, and also people in superannuation pension accounts where that's a zero tax environment and they can claim back those refunds. Typically, our experience is that people get, probably $2,000, maybe at the outside $5,000. So again, it's not a huge amount, but it makes a big difference for people who are retired and on age pension. And again, to show that they don't understand how the system works, if you don't get that refund, your age pension won't increase, because typically people are assessed on the assets test, and so it doesn't make any difference whether you get the refund or not. The share isn't worth any more, so your asset doesn't decrease, and so your pension doesn't increase. So anyway, I note in today's paper that apparently the ALP are going to announce a change so that people who are age pensioners or in pension phase in their super fund will still be able to claim the refund. Again, the whole thing is a bad idea, and to segment people out of it and while leaving others in it is going to create a very poor legacy issues, because there'll be people in similar situations. So apparently it's going to apply after a certain date. So if people later on take out a pension account, so there'll be some people who will be able to claim the refund and some people who won't, who are in exactly the same situation, and that's clearly unfair. Basically, this is a bad idea and they just need to drop it. I know I'll be talking to my local member and telling them what a poor idea it is and that they just need to dump it, and I hope a number of other people will do the same thing too. This is not a party political thing, it's just a really bad idea. So I sincerely hope they drop it. And finally, just a remark, some people may have seen Four Corners last night. There was an article on superannuation, and probably the key points out of it are that younger people need to begin and need to put importance on their superannuation savings as early as possible, because otherwise they just won't have money in retirement. And the second big thing was fees are a really important issue, and you need to have fees minimised. Now, that's obviously always been a key issue for us here at Advice for Living. We want people's fees to be as low as possible, because we believe that correct asset allocation, so being invested in the right things for the long term at the lowest possible fees, is the way to produce the best results. There were some, not surprisingly, horrific results from some of the bigger organisations. There was talk about bank financial planners, which are a bad idea because they're only ever going to sell you their bank's products, and also about one of the major organisations, Mercer, who is charging quite substantial fees and not allowing clients, or make it very difficult for clients to get into low fee funds. So certainly not a great article about the super scheme, but as I say, the important issues are young people need to start as soon as possible, and secondly, we need to keep our fees as low as possible. Anyway, that's about it from me. Sorry this has gone a bit longer than I expected. If there's any questions, please give me a call or send me an email and we'll be happy to help. Thanks very much.